And he's going to show us why the anchored VWAP is great for looking for confirmations on pullbacks and to trade channels. And then he's going to show us how he will apply the anchored VWAP on today's stock watch list. And as a special bonus, time permitting, folks, he's going to give us an update on his earnings scorecard. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Secondly, folks, you know that the chat is open to everyone, and remember the ground rules. Always be kind and supportive in your posts, okay? Keep to the topic. No political discussions allowed whatsoever. And also, folks, please keep your side conversations to a minimum so that the rest of us can focus on the education and the information that Roger's going to be sharing. Because after all, he's taking time out of his day, okay, to help give us an edge in the markets and to help us become more confident and consistent in our trading activities. So for those of you that were with us this morning at 8 p.m. Eastern Time for Roger's pre-market briefing, you'll note that there were several catalysts that we needed to be aware of today. On the chips front, we knew that Qualcomm came into the open down about 2%. In the technology sector, we saw that APP was up 6%, but that DoorDash was down 11%, and WBD was scheduled to release their earnings before market open. On the energy and the utilities front, we saw that Vistra and ConocoPhillips were all scheduled to give earnings before the market open. On the industrial sector, Parker Hannifin going to give earnings before market open. In healthcare, AstraZeneca giving earnings before the market open. And then as far as the Fed is concerned, we have several speakers on tap to talk today, but the anticipated jobs and productivity information we're looking for continues to be delayed due to the government shutdown. Now, for those of you that are wondering, why do we even talk about these catalysts? Well, you know what? From Roger's standpoint, he says catalyst equals volatility. And the reason we focus on these each and every day is because we know that information we know or will be known during today's trading session that isn't yet priced in the market is going to give the opportunity for volatility. And that's just something that we do need to be aware of. Now, as far as Roger's small cap watch list is concerned, there were 5 tickers that he gave us today: YGMZ, BIYA, FTEL, WORX, and STGW. And let's go ahead and switch over to my other screen here, and let's take a look at what these small caps are doing today. Okay, so you're looking at 8 panels here, folks, and the 4 panels or the 5 panels we're going to be focusing on are right here. In the upper left-hand corner, we have YGMZ, and the pre-market high was 28 cents. The market opened up, prices moved a little bit higher and back down, but we really haven't threatened going through this at all. For BIYA, the pre-market the pre-market high was 77 cents. And you can see we opened up here, headed in that direction, and then fell off on very light volume. For FTEL, the pre-market high was $5.15, and you can see we opened up and just drifted lower on virtually non-existent volume. Now, in the lower left-hand corner, we have Works, WR X, and the pre-market high was 52 cents. And right here on this bar, which is the 45-minute, at 9:45 to 10 o'clock, we can see that prices came into this area and broke through and ultimately topped out at about 66 cents. That's a 26% gain on that, folks. And this is definitely a winning trade. So for Works, WORX, a winning trade. And this is what we look for in these small caps. We look for pricing to come up, go through the pre-market high, give us at least 10%, if you will, if not more. And in this particular case, it gave us 26%. And then lastly, on STGW, we see the pre-market high was $8.89, and it hasn't even come close to that level whatsoever. So he gave us 5 tickers this morning, and one of them definitely hit. The other charts, if you're wondering what they are, this is the SPY here. We can see, we know that the SPY has been selling off. Bonds, interesting, TLT have been moving higher, and QQQ has been moving lower. And this is definitely a divergence. We typically look for bonds to be able to lead the market, but in this case, they've been moving higher, but we've seen a sell-off in the SPY and the QQQ. So let's go back to our original presentation here. And the thing before I move on from small caps, I want you all to know that Roger's selection process not only focuses on price action, but primarily extreme volume. Okay. He wants to see a small cap that's got extreme volume pre-market, and I'm talking about volume that's about 100 times what the normal volume for that stock is. Secondly, folks, if you consider trading these tickers, like looking at WORX today, you only want to trade those during normal market hours, not in the pre-market, only during more normal market hours. And, look to get a fill before 2 p.m. After 2 p.m., it's just not worth the risk of getting into the trade. And if you ever get into one of these trades, please don't hold them overnight. You're just inviting disaster from that perspective. Next up, Roger shared with us on the large cap front, he shared with us what his pre-market stock watch list was. And on the shorts, he gave us 10 of them. And as you know, Roger likes to bring each one of these symbols up, and he looks at the chart and he gives us a very quick analysis as to why he likes them. On the longs, where there were 11 longs that were issued there on the list, and the same thing. He opened up the charts and he shared exactly what he was seeing on each one of these tickers. Now, to make it on Roger's pre-market stock watch list, there are several factors that come into play, but the key thing is this: if any of these symbols hit Roger's levels, or or equal a setup that he is looking for, more than likely that particular stock or that trade is going to end up being published in the trading pit or in any of his other premium services where the setup applies. So once again, this is what he does pre-market, and he usually will give us an update as to what his watch list is in the midday in the VIP trade room. Now, as far as Roger's pre-market closing comments are concerned, we noted that once again, initially when we opened up at 8 o'clock in the morning, the markets were up slightly. But then as we came to the close of the session towards 9 o'clock, we noted that the markets were all moving lower into the open. We noted that the VIX had been moving lower. It's well below 20, just above 17, and just kind of consolidating there, and that the sectors were a mixed bag between defensive stocks and speculative stocks. But there were 3 red flags that he pointed out to us. Number one, the put to call ratio shows that buyers are way too aggressive. And he showed a chart where that just basically crystallized that point. The second red flag was that bonds were trading below the 50-day moving average. The third red flag was that only 40% of the S&P 500 stocks were above a 50-day moving average, and 54% above a 200-day moving average. And he pointed out that if the percentage of stocks above the 200-day moving average drops below 50, well, that's a sign, that's not a good sign for the markets. Bottom line, he expected some choppy conditions. He says there's a potential for some fireworks early, and then for the markets to basically be choppy, and to keep an eye out on bonds and the VIX. So today's agenda, folks, we're so glad that you're here today. We've got a great session that's lined up, and Roger's going to be focused on talking about the volume weighted average price, which is better known as the VWAP. He's going to tell us what the VWAP is and why it's so good for swing trading. He's also going to share with us the difference between the VWAP and the anchored VWAP. He's going to show us where and how to set the anchored VWAP. He's going to then talk about why the VWAP is great for confirming pullbacks and to also to use it in trading channels. He's then going to show us how to apply then he's going to show us how he applies the anchor VWAP on today's watch list. And if we have the time, folks, as a special bonus, he's going to give us an earnings update. So with that, folks, once again, we're delighted to have you here. And let's say hi to Matt. Let's say hi to Roger. Gentlemen, great to see you. Here we are, Roger. Midday, we expected some fireworks and then we expected some choppy markets. But I tell you what, surprised me. I was surprised to see the SPY sell off as aggressively as it did.
Yeah, yeah, me as well. Especially with the internals just now starting to get more and more bearish as the day progresses. When we opened up, the ADD was like near flat, so there really wasn't much. There wasn't much there. The volt started trending down pretty quickly, but again, the volt can trend down, and we can just have a very smooth down day, coming back flat, coming back down. But in this case, it was just straight down. Now the ADD is now getting into the 844 territory, which is starting to give us a little bit of a warning, and the volt is just going straight down. So we will treat this as a bearish day till we are proven otherwise.
Okay.
The silver lining on this is it's very easy to find directional stocks that are being accumulated by institutions on days like this. It was like when I saw IBM this morning, I was like, okay, we're seeing it's your win rate goes up astronomically because you're literally seeing institutions buy the stocks. And usually when institutions start buying stocks, they usually buy the stocks for an hour or two. They don't just buy it for 5-10 minutes. So, and right now I'm looking for Apple. I'm actually looking for Apple to get above the VWAP. So there's some good stuff. So we've actually been doing okay in the pit. We've been pretty slow on the swing trading stuff because this market is not ideal right now. It's very it's a dangerous market. But overall we've been doing really good. We've been killing it with the time spreads. I'll tell you that. Like killing it with the time spreads.
I know.
Obliterating it with the time spreads.
Hey, did you have fun in customer service live this morning?
I did. They actually helped me find a time spread that I'm going to look at right after we're done here today. So
excellent.
I said I'm going to start coming there for 20-minute blocks and start looking for time spreads with you guys. So, no, so far so good. Everything is good. All right, let me bring my well, I don't need to bring up my agenda. I know what my agenda is. Let me give you guys some levels. Let me share my screen, and then we'll get into some analysis. Okay.
All right.
All right. Let's do this. All right. So I'm basically looking for Apple to start getting above the VWAP and staying there for a little while. I want to see if we can confirm above the VWAP. I'd really like to see that. All right, looking at the broad market as of right now, we still haven't really broken out below this area that we're in. We're still in this area, and we're almost at the oversold territory, as you can see right here.
Right.
Once we start poking our head through here, that's telling us we're a little overextended to the downside. So we're not there yet, but we're getting close to being there. We're getting very, very close. And it doesn't necessarily mean we have to touch it. Like sometimes we'll come down here, we'll come down and we'll get through. But we are now almost below the 15-day EMA, and we're right at the 8-day and the 15 are barely holding on by a thread. But let's say we start coming up from here today, that could be a very nice shakeout, which can lead us higher. So we don't want to overreact, and we don't want to extrapolate. We want to just take it for what it is right now.
Okay.
So we have to be cautious. We're cautious right now. We're cautious. Here we were still in our range. Here we were still in our range. Here we're still cautious because we're getting near the 50-day, and the 50-day happens to be near this. But overall, this is really needed, and you'll notice that a lot of the large caps. Remember how we were extended over here? Well, the same thing will happen when we're here. And notice if we do get out of this area here, we'll be right at the 50-day. So far, what I'm seeing for is just a very much needed pullback, which will coincide with the levels, that we're seeing. But right now, I wouldn't be too. I wouldn't be jumping out of the windows or anything like that just yet. Okay. Volatility via the VIX is at 20, which means there's a warning. There's a warning. That means
Okay.
we're on Clyde high alert. Remember Clyde high
Hmm.
alert? That's Clyde on high alert. When that's right. When VIX goes to 20, Clyde goes on. Um, uh, we would have went. Anyway, that's what you need to remember. So we're still at this level. We're still at this level. If you look at SMH, we are just now getting to that level. So there's nothing really being taken apart here. So I would say the structure hasn't been broken yet, but Clyde is on high alert. Okay, he's on high alert. All right. Again, ADD is just not that low. I'm not seeing anything eye-opening here or anything that you need to really be crazy about. Again, this
Okay.
can reverse. We're still at this level here. We're still at this bar. When the high of the bar is below here, that's when we have a confirmation. But to me, it looks like we're just coming back to overextended levels to the downside, which is basically a ping pong match between the highs and the lows right here. Okay. Very similarly to how we did this right here. And then we do this. Oops. Then we go up here and then we come back down here. Okay. Um, Now, with that said, let me just confirm Apple above the.
And by the way, Roger, just
Yes.
as an aside, on the small caps, we did have one that hit and it was a winner, and
Ooh,
that
winner, winner,
was
chicken dinner.
WORX. It basically went through the pre-market high at 52 cents, topped out at about 66 cents. So a nice little 26% pop on that.
I'll take it. I'll take it. I'll take it. I'll take it. I'll take it, and I'll take it again. I'll take it any day and twice on Sunday. Hey, you know what? How many of our stocks since we've been doing it since you've been last few weeks since you started keeping score? How many have hit?
Okay, give me just a second,
Yeah, yeah,
Roger,
no, no,
because
no problem.
I do have,
Yeah, yeah, I knew
I
you keep track of all that.
yeah, yeah. Let me see if I can pull that up here. Where is that? I want to say the hit rate's about 17%, but let me pull this up and I'll tell you exactly.
17%.
Yeah. Yep.
No, no, no. How many times out of how many times out of no, out of how many stocks that hit, not hit rate, how many
Oh,
stocks that hit have yeah, that's what I mean by hit
oh,
rate.
74%.
Okay, that's
74, yeah. So out of all the stocks, that we give, about 17% actually hit. That means
yeah,
it
yeah,
moves into or through that level. To me,
right.
a win, Roger, is a 10% move. That's the way I'm tracking it. So
Yeah,
if
yeah.
something's moved at least 10%, that's happened 74% of the time.
That I'll take that. That's you can make good money doing that, you know?
Yeah, yeah,
You make
exactly.
very good money doing that. Okay, all right. So, you just see the market. I'm skeptical. Anyway, I'm kind of looking at some positions right here. Okay. So that's the market. So today I want to talk about the anchored VWAP, the VWAP and the anchored VWAP. Now, I'm not going to spend too much time talking about the VWAP because first of all, let me explain to you what all of this is. Now, folks, my suggestion is take notes. Take notes for the next half hour, 40 minutes. Take notes. Take copious notes. Okay? As many notes as you can. Okay? All right. All right. So what is this line? What is this mysterious line right here? That's the VWAP. The VWAP is volume averaged price. Volume averaged price. Okay? See these two lines right here? That's the 8-day EMA and that's the 15-day not 15-day. These are 5-minute bars. 15-bar EMA and 8-bar AMA and 15-bar AMA. This is the VWAP.
Okay.
The VWAP doesn't have any settings. The VWAP starts counting at the beginning of the day and ends counting at the end of the day. Okay? It's really, really simple. Now, my VWAP is right here right now. Now, why should you use the VWAP versus um, moving averages? Okay, or what's the big importance level here? Okay, um, Here, let me show you something. And if you don't understand what I'm about to write right now, then you need to go and rewatch what I'm about to say maybe 15 times because it's really important. So look, I'm going to explain it to you using common sense. Okay. That's the high. That's the low. Here it's $10. Here it's $9. Okay. This is everything in between. Everybody here understands this. There's nothing here that you don't understand. It's just price moving back and forth. Okay. Okay. Now watch this. This is me using a moving average. Okay. 5 shares buys every time price comes up here. Okay. 5,000 shares buys every time price downs here. Just pretend it happens every time. Here, 5 shares, here, 5 shares, here's 5 shares. Here you got 5,000 shares. Here you got 5,000 shares. Here you got 5,000 shares. And here you got 5,000 shares. And here you got 5 shares, 5 shares, 5 shares. No, it's not going to happen like that in the real world. I'm trying to illustrate an example for you. Okay. So if you're using a moving average, just a moving average, what it's going to do is it's going to take the price, the average price that was traded, which in this case was 9.5, and it's going to draw you a moving average right here. Okay. It doesn't take into account that somebody did a transaction at 5,000 shares and at 5 here. Now I'm going to ask you an interesting question. If you knew that somebody bought 25,000 shares at $9 and they bought 25 shares at $10, would that make a difference of where you're going to buy and sell that day?
Obviously, yeah.
Well, to you and me, but maybe some folks are like, oh, I don't care. It's just an indicator. I don't really care. What do you guys think? Omar, we'll see you later. Have a great day, Omar. So the moving average is going to be right here in the middle. It's going to be right here in the middle. This is going to be the moving average. You know why? Because half the volume came in here and volume came in here. It doesn't count how much. It doesn't ask how much. You understand?
Mm-hmm.
I mean, notice Raleigh. Nobody's in a rush to write anything. You see that
Yeah, I don't see any comments here in the chat.
Yeah. You and I understand it, but so I'm going to ask you again. You're looking at price between $10 and $9. 25,000 shares bought at $9 and 25 shares bought at $10. The moving average is at $9.50. That's telling you that that's the moving averages, okay? That's not helpful with your writing, Pink Sparkles. What you're saying is not helpful. So the moving average is going to be at $9.50 because we have trades happening at 10 and happening at $9. Well, exactly, Eric. The real support is $9, not $9.50, because this is where all the volume came in.
Right.
Think about this. 10, 15, 20, 25,000 shares came in at $9. 25 shares came in at $10, and the moving average is trading them completely equally. Do you think that's fair? Forget anything you know about the markets. Do you think that's normal? If you're trying to figure out if you're trying to discover price, do you think 25 shares has the same weight as 25,000 shares? Well, guess what? Your moving averages treats them exactly the same. Why? How is VWAP different? How is VWAP different? VWAP takes the volume into account. That's the only difference. Okay?
And that's huge.
And that's huge because if this was a VWAP, it would be like right here. It would be like right here.
Yep. And Roger, it also takes into account that so much volume is moved through institutions.
Well, impliedly, of course, that's the whole point.
Yeah.
So this thing right here if you're day trading, it's one of the most useful indicators in the world. Well, Roger, we're not day trading. Why are you talking about day trading? We don't care about your stupid day trading. We're not all day traders. We're swing traders. Okay, fair. That's where the anchored VWAP comes in. That's called a VWAP. So VWAP versus a VWAP. Now, if you send me an email asking me about this, and you're going to start talking about swing trading, and you're going to use the word VWAP, I'm going to know that you were not listening to me, and I'm not going to respond to you. If you're talking about swing trading, there better be an A in front of the V. If there ain't no A in front of the V, then you're talking about this right here. And this we only use for day trading. So I'm going to repeat this again so there's no confusion here. For the rest of your life, when you're talking about day trading, you're going to talk about the VWAP, which starts at the beginning of the day and ends at the end of the day. There's no settings and there's nothing to look at. It's boring. It's simple, and it works amazingly well. Then there's the anchored VWAP. That's what we're going to talk about today. Okay? The anchored VWAP, you put on daily charts, and you use them for swing trading. Okay? All right. So there's two ways to skin a cat. Two ways to skin a cat. You got the VWAP, and you've got the anchored VWAP, which is right here. Okay? Okay. Now, if you guys are missing this session, you guys are missing the big one. All right. Okay. So, Roger, I get what you're saying. It's way more important than any other indicator because it's actually taking volume into account, right? Volume. And as you saw by my example, volume is probably the most important thing to price. Because what do I care about some average that's not based on volume? I can buy one share at the high and confuse the whole indicator. Whereas 100,000 shares, they're basically going to look at my one share and give it the same way as somebody who just bought 100,000 shares a point below. And you're looking at me going, did they do that? Yeah, the moving average will do that for you. It doesn't look at how many shares were bought at the high. It just looks at the high, the price. You understand? Price without volume is nothing. Costas, you're getting a little ahead of yourself, my friend. You're getting a little bit ahead of yourself. He's already asking the girl to marry him before even finding out if she's a real woman or if she speaks English. Let's not jump the gun. Everything in due time, my friend. All right? Everything in due time. So, if you don't believe the reason I just gave you, Matt, are you short or long?
Short.
Okay. If you don't believe Okay. If you don't believe what I'm telling you, I have a better source of authority for you. Okay. Now listen and listen good. I'm going to give you some rumors, gossip, and innuendos. Okay. Back during COVID. Okay. Do you guys remember the whole GameStop fiasco?
Mm-hmm.
It was really, really big. It was a big, big deal. And Congress got really, really concerned about manipulation, about stock market manipulation. They should have been investigating Pelosi. Yeah, I was going to say they should have been investigating Pelosi, but that's a whole different story. Because it's a good story behind it, Shepard. There's a good story behind this. I want to get into the story, and it's not 30 years. In 2 months, it's going to be 32 years. But anyways, I digress. Let me continue. Actually, you know what's bothering me? I want to put in a time spread. Do you mind, Raleigh? It'll just take a second. It'll just take a second. Hold on.
Go ahead. And
that's what's throwing me off. I got a time spread that I'm looking to put in.
Folks, he only has 9 monitors there, and then he's got Matt, and Matt's got, I don't know, Matt, how many monitors do you look at?
6.
6. So there's a lot of heat being generated here. Oh, and you're in the new offices, right?
Yes.
The high speed with the high speed internet and everything. Great.
Allegedly.
Allegedly.
It looks working so far for me very well. November 14. I'm almost done.
So once again, the key thing is this, guys, as Roger said very, very specifically, if you're looking and you're concerned about the VWAP, you're only looking at applying that and using it when you're day trading the markets, okay? The anchored VWAP is what you're going to be using and setting up to swing trade on a daily basis. And he's going to talk more about that, and we'll talk about anchoring and things of that nature and how that works. That's all going to be covered. It's all coming up.
Yeah, I'm going to talk all about it right now. I just wanted to issue this before time gets away from me, okay? Okay, there we go. You
Yeah,
guys
the
have
new
it.
office is in the Jacksonville area, folks.
It's
Yep.
in Ponte Vedra Beach, actually. It's
Oh, okay.
six minutes from Jacksonville is like 25 minutes away, but it's literally 6 minutes. By the time I get on the phone with Matt and hang up on the phone, I'm already at the office. The last one I was able to at least have a conversation with him. This one I'm there before the conversation ends. Okay, sorry about that. I wanted to just give you guys a little time, give my peeps a time spread. Okay, let's continue. So during the hearings, the Congress, sworn under oath or perjury, okay, the government got concerned that there was manipulation taking place during COVID. So they had Ken Griffith, the biggest hedge fund manager and the biggest market maker. He owns a hedge fund and a market maker. Is that legal? It shouldn't be, but it is. He's responsible for filling 2/3 of all of your orders. So you know how I always say, how I always tell you guys, for every buyer, there's a seller. Well,
Yep.
every time Ken sells something, you guys buy it from him, and you do it about 68% of the time. So almost 2/3 of all of your transactions are done through Ken Griffith and Company. These are not theories according to Uncle Roger. These are mathematical facts, which is something that I really love to believe in. And this is according to him in Congress. So while Ken Griffith loves to lie and bullshit everybody, he can't bullshit and lie to Congress. He has to tell the truth. So they started grilling him about what he does and how he does. And you know what he told Congress? 2/3 of almost every trade we do is based on a indicator that's similar or is the VWAP. Mm-hmm. And I'll
Mhm.
show you the actual testimony about half an hour from now. So if you have any question about how valid it is or how the validity of it, 2/3 of your transactions that you're trading against are taken using the VWAP, and that's according to Ken Griffith during congressional testimony. So you don't have to take my word for it. Take Ken Griffith's word for it. Okay? All right. So we already know where we draw the intraday VWAP, but what about the daily VWAP? Well, let's go to the SPY. Remember, the VWAP starts every day at the beginning of the day. So for every index, okay, you should have 3 VWAP levels. I'm missing one right here, but I'll put it on the other chart. You should have the year-to-date VWAP, quarter-date VWAP, or quadruple option expiration, which happens 2 days before or the day before quarter VWAP, which is probably better, which is what I use. See, one is right here, and one goes to the beginning of the year, right here. I have them on every stock that I give you in the morning for our swing trades. Every stock that we use, I use this boilerplate chart. Now, there's one VWAP, or I shouldn't say VWAP. There's one anchored VWAP. There's one anchored VWAP that's missing from all of this. Okay, Matt, the oscillator on AZP is bottoming out. Just FYI.
Mm-hmm.
You sure talk a lot, Matt. Mm-hmm.
Oh, I'm focused.
I know you're focused. So here's where it should be. This is the same thing. This is the SPY, right? See right here? That's what's missing from here. This VWAP right here, which takes us like right here. So TC2000 thought that the VWAP was so important that they put it right here and make an anchor out of it right there. And you could just anchor it right here. That's how important it's one of the main tools that they have here. So what do we use the VWAP for, and how do we use the VWAP? Well, several ways. The first way we use the VWAP is exactly like we use the moving average, except it has a lot more value. They are our primary support levels, and these are our secondary support levels or resistance levels, whichever floats your boat. Quadruple witching art, quad, not triple, quad. Commodities too. It happens 4 times a year. You guys want those dates? Quad witching dates. See, Art, they're right here. They're right there. Right there, guys. That's all you need to do. Quad witching. You know what the first day of the year is, and now you know what the quad witching dates are. Put your VWAPs there. And then keep it on the highest swing high and the highest swing low. Okay? Very, very important. Those are the 3 places I look at. A lot of folks like to use beginning of every month, this, that. It starts getting too hairy. The ones that are really effective, the ones that institutions use, are intraday, the VWAP, and then beginning of the quarter or quad witching, which is when they reposition, beginning of the year, and swing high and swing low. And I'll explain in a little bit why that's very, very important. Okay. How can you use these VWAPs? Okay. Well, let me show you how we're you're getting filled at 84. Good, Hope-O-Matic. Do me a favor, don't post it for everybody here to see. It's a private trades. But thank you, sir. All right. So you see how we're using it here, how it's being used as a support line right here. And you see how here it's just mimicking the 200-day moving average. Okay. It's okay. But there's another way to use them, and I'm going to show you how to use them. And I showed Richard how to use them that one time, and he still loves using them this way. Are you guys getting some value out of this class? That's what I want. Mm-hmm. All right. Okay. So let me give you an example. Here's IBM. Okay. I really like IBM right now. And so what I would do is I would see if this breakout is ready to go or not. And what I would do is I would take the VWAP and I would put it right here at the last swing high. And when we put the VWAP at the last swing high, that's telling us the level we should start buying IBM at. You see how IBM is trading right at that level, and today it actually went above that level? That means IBM is ready to go. Now let's take a look at Apple. Let's put a VWAP right here. See, Apple's trading right now above that level. As a matter of fact, 1 second, I want to do something. This will just take 1 second. Okay. All right. So, Beatrice, I answered that question. The last 10 minutes I've been answering this question. There are 3 places to anchor your VWAP. Beginning of the year, quad witching or beginning of a quarter, and then the recent swing high or the swing low, which in this case is right here. I just showed you 2 examples, and the swing low would be right here. So you would look for a breakout up here, or you look for a breakdown right here. Those would be the 2 key 3 key levels. So again, beginning of the year, beginning of the quarter, or quad witching date. Just plop it right on that date, and then the recent swing high or swing low. So anytime I have an A line or I have a what we call a quick strike trade. We put them here and here, and we wait for it to bust out outside of this channel. Because this is telling us right here, this VWAP, when it goes above this so let me explain to you the ramifications of this. It's got a lot of ramifications, okay? If you put a VWAP right here or anywhere else, and you see price starting to move above that level, above this line right here, that's telling us that anybody who bought here is not losing money anymore. Okay? So let's say that a whole bunch of folks put a lot of shares in here, and this calculates it for us at the mean. So right here, this person, and this person, they all lost money. Today, anybody who bought above this line right here, above this line, is now making money or at least made whole from their buys over here. Thank you, Shepard. No, it doesn't, Gary. Thinkorswim doesn't make anything easy. TC2000 and TradingView make it really easy. Thinkorswim makes everything a pain in the ass, but that's just life. That's how we roll. Remember what they say: the things that are easy are not always the best, right? Okay. All right. So,
Roger, there was a real quick question. When you anchor
I
the
like
VWAP
questions.
on the TC2000, the way you're doing it, does it matter where you anchor it on the bar, or do you just touch the bar?
No, well, there are several it'll just anchor to the bar, but what it'll do is it'll anchor it on the average between the high, low, close, and open. That's what it'll
Okay.
do.
So you
And
click on the bar. Okay, I got you. Yeah. Yeah.
And you could specify the settings ahead of time and tell it what you want. And I don't ever change. I don't change any of them. It's just
Okay.
standard setting.
And the other question was this, Roger, when you anchor to the beginning of the year or in the quad witching quarter, does that automatically carry over from day to day, or does it have to be retraced at all, or is it just carries over?
It carries over. It's like a moving average.
Okay, like a moving average. Okay,
Yeah,
great.
it's just like a moving. It's just like a moving average.
And the discretionary one is the obviously swing high and swing low because you're looking
Yeah.
for those recent events. All right.
Yeah, and those work really well for A lines because we have A lines. And so let me tell you a little story. This was an interesting story. Richard was trading this stock right here, TPR, a long time ago. A long time, like I think it might have been somewhere. I don't remember how long ago, but it was a long time ago. And the setup on TPR was exactly like the setup right now on Apple or on IBM. Basically, it was a clean A line, like IBM right now. Okay, that's a clean A line right there, or Apple, whichever one. They're both having an A line right now. So I have it, Teresa. I have it on the swing low right here too. Right here, I have them on both. So, and I'll show you a short if you want to see an example on short. So the point here is he had a tapestry trade like this, and the setup was exactly this setup. It was an A line on tapestry, and he's like, okay, we were right here, and he said, I'm going to take profits now. I said, no. You want to add to the trade right here. It's above this area, and he did, and it went all the way to the top, and he made money on it. But the moral of the story was that these are really good, and if you want to buy on pullbacks, this right here will give you a really good area of where you should be buying based on volume, not based on price, based on volume. Okay, volume, which is really important. So, and you can't do that with your eyes. I can't do that with if I was to use my eyes, I would be buying somewhere right here. In this case, I mean, it's not too late, but you see, I could have already been long, hypothetically speaking.
Yeah, I can see that.
So I mean, it does help. It does help. And now you know that everybody who bought here is no longer losing money when the price is over here. So they have a best interest to hold the trade. So it's really, really good. Can you please point out the swing low on IBM? Yeah, sure. Here, I didn't draw it on IBM. I drew it on Apple. Here's the IBM. Here's the low, and here's the high right here. See it right. See it right here. There it is. It's right here. So in this case, hypothetically speaking, if IBM went, that would be a quick strike trade. Okay, quick strike trade. All right. So very, very simple, very, very clean. So let me just review real quick with you guys, okay? Very, very quick. What is a VWAP? A VWAP is a tool that you use intraday to day trade. If a price of a stock is above the VWAP, then the stock is priced above fair value for that day. If a price of the stock is below the VWAP during intraday, that means the stock is priced below fair value for the day. Okay? We buy stocks that are above the VWAP. We sell stocks that are below VWAP if we are day trading. Okay? Day trading. Art, please don't confuse a SPY day trading tool with what we're talking about right now. Please,
So the interesting couple of questions that come up, and one thought that I have in my mind, Raj, is the value of the VWAP and the anchored VWAP is now apparent. Why even have moving averages?
Because moving averages are very important because institutions use them.
Okay.
Institutions, you want to mimic everything that an institution use. Institutions have rules. If we're above the 50-day moving average, buy the stock. If we're below the 50-day moving average,
I see.
Don't buy the stock.
So they're still triggering events or support and resistance levels for the institutions.
Yep. Exactly. Big time. So again, the point here is VWAP intraday. There's no anchor. You don't anchor anywhere. It just starts beginning of the day and it ends at the end of the day, and it starts all over every day. Anchored VWAP is different. And anchored VWAP is levels that institutions use to determine where real value is based on volume. Volume. Very, 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 very important word. Something that actually matters when it comes to stocks, okay? You see, guys, I want to explain something to you. Let me just take a second to explain this to you. 99.9%. Okay, here. I'll explain it to you like this. I'm gonna give you guys a little eye-opening moment here. Okay, look. Here's where the problem begins, okay? Here's the problem. This is considered the Bible on, when I was growing up, this was the Bible. John Murphy, this was the Bible on technical analysis. Look at the name, Technical Analysis of the Futures Market. You see that?
Mm-hmm.
Okay. Okay, look. See, look, is John Murphy's technical analysis still the best of the best? You see that? This is like the Bible. This is the Bible. This is what everybody reads when they start trading. But look at the same book now. Wait a minute. Whoa. What happened to the word commodity? It's not here.
Futures, it's not there. Yeah.
Not anymore. So they were lazy. They decided to take exactly the same book, and yes, I have both versions, and they decided to take the word commodities or futures out of it and just leave it alone. So 30 years ago, when you were a commodity futures trader, you would look at this book and you would buy it, and then you would learn all these cool things. But what happened was instead of folks rewriting books, when folks started trading stocks in the 80s and 90s, not 80s, in the 90s, all of these gurus, these futures commodity gurus, they decided to take the word commodity or futures out of the name of the book, so that people who were trading stocks were going to buy the same books. So, and then 15 years later, they did exactly the same thing for cryptos, technical analysis of the crypto markets. Now, the Murphy example I just showed you happens to be the best example ever, because that's like the Bible of technical analysis, okay? But here's what I'm trying to get to. You've been lied to. You've been screwed your whole life the minute you got into this market. And let me explain to you why. You've been reading about indicators that work for commodity markets, futures markets, and you think they apply to stocks because all of these books don't say anything about not having stocks, you see? Because financial markets are stocks. You've been duped. You've been lied to. You've been bamboozled, okay? So people think, oh, if the RSI worked here there, then it works here. If the moving average worked there, then it worked here. If this indicator worked here, then it works there. No, it doesn't work that way. Even though John Murphy and everybody else who's trying to sell you books is telling you that it is, it does not. So why am I explaining all this to you? And what the hell does this have to do with the VWAP? When you're trading futures, volume doesn't matter because you have fixed contracts. You understand? Volume doesn't matter when it comes to futures. 40 years ago, when John Murphy wrote that book, everybody was using math-based indicators because they were trading commodities. And in commodities, volume is irrelevant. But with stocks, you have shares, and everybody trades different shares. So volume becomes important. But these knuckleheads who wrote these books 30 years ago didn't understand what I'm teaching you right now. So everybody assumes incorrectly that all of these books and all of these tools that worked well for commodities work just as well as for stocks. They do not. They do not. But you see why you would think they do? Because even the Bible of technical analysis tells you that it does. Because they changed their name from futures to financial. I'm sorry to explain this to you, but you've been bamboozled. You have been bamboozled, my friends. Each and every one of you. Because everybody does what John Murphy's doing. Everybody. You see bar chart? Here, let me show you this. You see this right here, this bar chart? Bar chart was a commodity futures site. I've been using bar charts since the mid-90s. They did not have anything relating to stocks. But you know what they did when they added stocks? They took every one of their technical indicators that they've had for commodities for decades and they added them here. And then you thought, this is how I start my $5,000 courses, Don, by the way. I'm just telling you. And you guys, so future source, bar chart, TC 2000 was a commodity. All of these started out as commodities, but they didn't understand the big change. You needed to change the indicators. And they just like, screw it, we'll just add stuff later on. And I'm explaining to you, you can't trade stocks the same way you trade commodities, even though Murphy and every book ever published says you can. Well, it's technical analysis. It's just price. If it's just price, you should be able to trade it any. No, it's not the same thing. Some price action is trending. Some price action is counter trending. So 90% of the crap that you guys are, 90% of the crap that you guys are reading and thinking works really, really well for stocks has no application on stocks, and that's where I come in. Okay, so VWAPs and all this stuff, it wasn't even around back then. Nobody even knew what it was back then. Hold on,
Right.
I got to take profit
Because it didn't apply. That's the point you're making. It did not apply. I'm a futures trader. I know these things.
Yeah.
And you're right. So, I mean, Roger, you know all the indicators that we use in the commodities markets, and they were helpful,
Yes.
but they do not translate.
No, they don't. They don't. But you see, the problem is you read, most people started out and everybody, they read, I could show you 1,000 books right now that are recreated from books from the 70s with exactly the same name. They just cross out futures,
And say
Forex, stocks, options, Bitcoin, you name it, it's all, they all, so my point is you can't believe any of that crap. So this is why I'm telling you volume average, and you could trust me, you know how? I worked with Curtis Faith, the youngest turtle trader. This is the group of the biggest commodity traders in the world. I started out as a futures trader and a futures broker. I started out in the futures business. You understand? This is how I know all this stuff. I was there before any of this stuff was around. Okay? That's how I know all this stuff, because I read those books 30 years ago. So, thank you, Robert, for your suggestion. But I needed to explain what the VWAP was versus an anchor VWAP so you could understand the anchoring methodology. Now, I'm pretty sure that everything I talked about right now was really, really important. Now, I am going to have, I'm not done yet. I'm just getting started. I'm going to have right now a very, very cool class that will explain everything in detail about the anchored VWAP, like in detail, all right, in great detail. You haven't seen this in several months, All right. I'm going to do this right now. You guys are going to enjoy it. I'm going to explain a lot of the same things that you just heard from a different perspective. I'm going to show you several examples, and you guys are going to absolutely love this. What do you think about that, Raleigh?
I think that's a great idea because I think that's when we're headed. People want to know, okay, I got this, Roger, so how do I use it? How can
Yeah,
I
well,
apply it?
yeah, I'm going to explain it to you guys in great detail right now. In great detail. You guys are going to absolutely love this, okay? All right. Profits performance, they're not typical. We make no future claims. And folks, I'm going to show you real examples. I'm going to show you those quotes from Ken Griffith. I'm going to show you all that stuff. Okay, Robert, I'll do it. I'll do it. There's also there's also I made a class. It's called the Full-Time Trading Class. It's probably the coolest class I've ever had. It's a 6-hour class. It's included with what I'm going to be talking about right now. Please listen to what I'm saying right now. You're going to enjoy this tremendously, okay? Profits performance, they're not typical. We're not going to make any future claims. You may lose money. The trades expressed are from historic signals, actual signals.